Good day, fellow investors. Just to make sure, this stock market, AI and everything is a huge bubble in my opinion. I'm just not predicting when it will burst, and yes, it can go up another few legs. Here we have Bloomberg explaining how it can easily go to 9,000 compared to the dot-com bubble. Then we have BlackRock saying how Fed cuts, AI spend support a pro-risk view, so buy stocks, don't worry, go, go, go. Elon Musk is launching AI, 20 billion like this, even oversubscribed. Everybody is investing in AI, increasing their profitabilities. Everyone will be printing money. For now they are spending, but they will be printing. And earnings will grow at 10-15% per year, therefore no price you pay now will be relevant. Everybody will get rich, but BMW is not doing well. If everybody is getting rich, why are you not buying Beamers? Is it a bad car? What's going on? Well, here something from the book One Up on Wall Street. This is the book to read now. Peter Lynch says that with every uptick of a stock price of a stock market, the justification of that uptick gets crazier and crazier. Oracle is giving its strong cloud infrastructure outlook from a dozen billion. They will make 150. Wow, so huge growth. Just the bookings on their cloud deals plus 300 billion, because OpenAI said we'll spend 300 billion with you. They made 12 billion this year. So huge projections, but again, nobody asks about costs, and when nobody asks about costs, it's a clear bubble. Everybody is exuberant, but what about giving me this? The same power you're expecting at current prices at a discount. I go to the same AI that everybody is crazy about. I ask Google here, is Chinese AI cheaper? And then Google says, yes, Chinese AI models are way cheaper. This means that, like it has been for manufacturing in the last 15 years, it's even easier with AI. I can go online to China, use it cheaper, use it way cheaper competition. That's why this AI is a bubble, because nobody thinks about competition and costs. 5 years from now, we'll all be using AI, but from the cheapest provider, which means nobody will make money. Great comment here, you can pause it and read it. People seem in denial, and why does that happen? Why is this overlooked that you can buy AI cheaper? Well, stocks go up, we make deals. Who cares about efficiency, about costs? Who cares about doing business? Let's just ride the wave. As anybody mentions OpenAI, stocks just jump higher, 10-15% just on that mention. Boom, 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 boom. Everybody's enjoying it. The only problem is nobody knows when it will bust, so let's just ride the wave as long as it goes. And then somewhere people panic and ask themselves, okay, is this an AI bubble? Is it not? These stories on AI bubbles go up and down, the mentions. So now a little bit greedy, a little bit no greedy, but this is from Bloomberg. What are the characteristics? Cheap money underpins and creates a bubble. Nvidia, everybody's flushed with money, making promises. Debt, equity, price increases, buying on margin, on promises. Once a bubble is formed, the asset prices has a notably expensive valuation. As I said, nobody cares about price, and there's always a convincing narrative to explain away the high price. Investments, these investments will pay for themselves. However, big tech capex as percentage of EBITDA is now running at 50-70%, similar to AAT, 72% at the peak of the telecom bubble. Vendor financing, Nvidia is just connecting with everyone, but on the other side there is competition. Who knows who will win? Nvidia 100 billion in OpenAI, 300 billion in Oracle, Nvidia CoreWave. Even the government is helping there a little bit. things like that. We'll see what will the profits be on this. It's impossible to know. One thing we can know is that this guy, he's one of the best investors ever, and that when the party is at its best, it's hard to speak of bubbles. However, nobody can predict, but you can decide how you will be positioned. Let me just go to Peter Lynch's book. This is an introduction 2000, speaking of hot internet stocks. You can just replace internet stocks with AI. With today's hot AI stocks, fundamentals are old hat. The term old hat is old hat itself, proving that I'm old hat from bringing it up. The mere appearance of an A and an I.com, blah blah blah, you can pause it, you can read this, enjoy, you will laugh. And what is his conclusion? He will keep on investing the old-fashioned way. Keep in mind, this was 1999 or 2000 when he wrote for the second edition. This is Peter Lynch, Magellan Performance. He destroyed the S&P 500. This is Peter Lynch for his wife pension fund. He destroyed the S&P 500 till 2021. Like Peter Lynch, here we stick to fundamentals. This is a bubble. I don't know when it will bust, whether it will bust, nobody knows. It's likely going to end ugly. I don't want to see my portfolio, see that ugliness. You make your own decisions.